welcome back to the Compass. As we, I guess, kick off an episode where it's sort of pre-Beaver Creek, post summer doldrums um, episode. It is Tuesday, September 2nd. We are very lucky. The gold price is rocking north of $3,500. Some stocks are moving too. Great time to go to Beaver Creek and see what comes and see what occurs. Um, Last week we talked about we called defensive, right? Getting ready for the fall, names that we had in the portfolio, what news and catalysts we're expecting. Like I said, we got some of that. We'll talk about it. This week we're talking about being on offense. We've got a little bit of cash in the portfolio, and so we're looking for some new things to invest in. And so, kind of what we're looking for. What does the next all of investment look like as we look ahead to Beaver Creek and Denver, where we're going to be looking for things to buy.
Summer is over. Back to work.
Exactly.
No, yeah. Last episode we spoke, to some extent as to how we think about the investment process. It's two parts: defense and offense. And defense is more defined as what you already have, which is offense is the rest of the investment universe and all the opportunities are there that you currently don't own. And there's an exercise all the time where you have to be on the look and trying to identify opportunities as they come and try to get out there at the right time. That's essentially the essence of our function and of the investment process. So I think just from a logic perspective, I think first we should cover some of the news that have come out in respect to the defense part, the positions that we already have. And then maybe we go into a little bit of detail in terms of maybe a little bit abstracted, but some of the things that we've seen over the summer that we want to certainly try to pin down the conference in the next 2 weeks, meet with the companies and try to really understand how big the opportunity could be and to have to make a decision to invest. We sort of go with how those stories look like. What is it that has interested us so much? But a few of these, and also just more broadly, a little bit of a recap of the kind of the investment factor that we pay the most attention to, and sort of how that also provides a good framework as you go into a convention where there's hundreds of companies, many brokers, and obviously everybody's targeting that, dollars. So the opportunity set is greater than you can stomach, than you can chew. So the framework is very important to optimize and to have a process in place to take advantage of it.
Yeah, I think that's the key thing, right? There's hundreds of companies to invest in or potentially invest in, and there's a few that we can invest in and have meaningful positions on. So we're figuring out how to make which bets to make. Just maybe I'll step in a recap of the news. I think actually the biggest one for us last week in our portfolio is Omai, which is a huge chunk of our portfolio, released its updated resource and a big lift over the prior one.
The thesis has been correct. The blocks have reconciled the new drill to ore. There is some strike extensions. There's some brutal areas. Frankly, the thing is growing in every direction, and there's more drilling to come still. Obviously, the resource has been published. So all the new drilling will not be incorporated into the new study, but the informed participants can still read into those future drill results and interpret what they would mean in the context of the research material. The global resource is well north of 5 million ounces, well north of a gram and a half by every definition, which is two of our research. We've said this many times over, but this is a former producing site. So from metallurgy perspective and other types of studies, it's as easy as it gets. You have real world data that you can cross-reference and validate against. So very little concern in that front, and from our perspective, outstanding work that you made of.
I couldn't agree more with everything you just said, and it's definitely something that we, a decision to invest there was something, that happened 2 years ago at Beaver Creek, right? We
Yes.
met with Elaine, talked to her about, the realizing that the skeletons were buried, and on that company, and then all of a sudden their opportunity presented itself to buy a bunch of stocks sub 5 cents, and it took off. But that was really was a Beaver Creek story for us, that we sort of not found but rediscovered there, knew that something had changed that made it worthwhile.
It was actually we already owned the position. It was the moment when we decided that it was going to become our largest holder one year, and that honestly we moved so quickly after we kept buying, but it moved so quickly that um, performance took care of the position time. But we were on the way of building on the creative position, but pretty satisfied with the results, and looking forward to you know people, more and more people learning about the conferences and the technical study that are yet to come. More to see.
In other news, I guess, still important for our portfolio. One was Orion Resources. They had a strategic investor come in. Very interesting. Obviously, not a lot of information is disclosed on the strategic investor. Actually, no information is disclosed on the strategic investor. Um, but I think, our interpretation of it, is that, you know someone's moving pieces on the chessboard there, and that's why the investor is not disclosed. And while we think that M&A, that there is a future M&A thing there, where there's a consolidation, between of that ground to make Rupert Sakari project really work. The reality is what we're looking forward to and what we're excited about by the strategic investment is that they've got money to be aggressive at Karaselka. And I think the drilling that we've seen to date at Karaselka and what I think they can deliver, suggests that they're really onto something there. And that, the market really hasn't been paying attention to it because it's been distracted by this M&A situation. And so I think as they start to drill more Karaselka and surface some of that value, to the market, I think the stock has a chance to really outperform, relatively speaking.
Yeah, no, and the stock reacted well, really well to the announcement. And when I don't have the numbers in front of me, but the story hit $1 today. I want to say the placement was around 80 cents, and I get with that 9.9%. But I think in the playing defense mode, this just this just validates this is the sequence and the order of the events that we are anticipating. So from our perspective, everything is going according to plan. I'm pretty sure inside at the board level, it's more complicated than that. But this part that we get to see, everything is moving according to plan, and the stock is reacting well. So we certainly welcome the news. And like you said, um, we we articulated this maybe a year ago. There's three reasons why we own this company, and the three reasons are still there. And the drilling on the 100% owned area is only one of the three. But in our view, that's the one that could potentially carry the most value at this point, and the one that most participants in the market seem to be ignoring. So we welcome this news. And again, on this one, we also think there's much more to come. So stay tuned.
And then the third name news out just out this morning was a name we talked about and bought a position in a couple months ago, and has been on a bit of a move, is Elemental Altus Royalty. If you remember, they had a bit of a transformational investment, or their shareholder base transformed, and they got in. Tether became their largest shareholder. I think they're just over 50% from a control perspective, or just below 50%, one of those numbers. So significant, to say the least. And one of our theses on that is we thought there might be potential for fund flows from the sort of the crypto world and the crypto investors, that Tether is really more associated with. But the other thing that I think is important is that we thought they were going to be able to be more aggressive on the acquisition front. And I think that we saw that this morning. They acquired a couple of different royalties, some in Western Australia, one in Africa, and you know, and really was an aggressive move, right? They basically spent their cash balance and their revolver to do it.
The
Yeah, like
revolver,
they
the
got to, you know,
stuff you
yeah,
drive.
every penny is walking out the door almost. So I, but you can do that when you have a large supportive shareholder that is willing to, backstop you if something goes wrong. Obviously, they're a royalty company that's generating revenue, and so obviously that cash balance will replenish. But I think that's their ability to do that and take a little bit of risk on the balance sheet is directly a reflection of the current state of the business.
And no knock to them, but in this case, this is a significant upgrade in terms of the type of beer that they can
Right.
entertain. This is a large deal, established participant, large bites. It's the cap structure if you want, but it's like a 2% or a 2%. But it's not a small, insignificant deal by any measure. It's actually a substantial, potentially could become a quite significant royalty with the James's development works as expected. So I think that it's kind of like a soft graduation into the higher echelons, which is exactly what we were thinking they were going to be able to do. Now that, like you said, it's almost like having like a standby equity facility at all times. They probably just manufacture the deal to just exactly use all of the liquidity available, but knowing that had something, if something goes wrong, they have like a standby equity facility that they could tap into it. And from the cap structure perspective with that type of shareholders, then again, that's another one where it sort of feels like they're shooting us as you expected them to, and we're very happy to see these beats.
Yeah, I think that's a theme. These three pieces of news that we're talking about here today is that like it's kind of management teams executing, doing what we expect and what they've said they're going to do. And I think it's a key factor for us when we're picking, right, as management teams, but not just that we want you're not just management teams that say what they do what they're going to say. I mean, that's like you assume that that's a given, but in junior mining, it's not always the case. But management teams that execute, right? I think have a history of execution, and I think that that's something that we really look for, and you can see that in this, right? We knew catalysts were coming. And that pieces were going to move, and in each of these companies has sort of executed on that approach.
There's actually a fourth one that fits this exact same criteria. The Arizona Sonoran announced that they acquired some land adjacent to Cactus, and this is something that hasn't been like telegraphed per se, but this came up. Was it the PFS last year? The PFS that the new PEA. There was already a question about whether they had enough land to afford themselves enough flexibility with layout plans and processing facilities without having to impede any of the actual mining. The answer was yes, we could do it within Guam, but the better answer was if we can get more grants, it'll be better. And here they are this morning, this announcement that these are things that take a long time to. We read the release this morning, but this has been in the works for months, maybe even longer than a year. So again, something that perhaps management didn't telegraph, but smart people doing smart things on the management teams, looking ahead, thinking ahead, and that gives us great comfort.
Yeah, and I think the other thing that's important there is the deferral of the structure on that as well, right? Like there's a little bit of money that they had to pay out now, but the reality is that the bulk of the payments is going to occur when with a construction decision or with capex funding. And to be brutally honest and fully transparent in our view on this investment, I don't expect Arizona Sonoran to be making the final payments on this land. That's why we're invested there. There aren't copper assets like this in the lower 48 that are available right now. So in a junior. So I think that's a pretty George is writing a check for somebody else a little bit, but de-risking it for that larger company, which I think is important.
There's a lot of green on the screen. Um,
Yeah, it's a good.
let's talk about the future.
It's a good day for investment, and it probably tracks to normally Powell's speech during the Denver Gold Forum. So usually there's a meeting right in that week, and I think there is again this year.
Yeah.
I have a double check.
Yeah.
And normally right at the end of the Gold Forum, Powell provides a speech and throws cold water on everything, and the stocks sort of trade off out of that conference. I think we might actually get the opposite effect this year. There is that potential, I guess, based on what he said at Jackson Hole.
I don't know if you saw the meme. They showed a picture of him talking in power, and they said, "This looks like a guy who lowered rates just for a little bit of peace, like the mix of stress." He's going a little bit of time.
Yeah.
Okay, over to offense.
Over to offense, right? So we talked a little bit about recapping the defense, and yeah. So I guess maybe before we jump into kind of things that we're looking at, or maybe things that we're looking for, specifically, kind of let's talk a little bit about our and this is something you always have to remind yourself of. What kind of investor are you? What is your criteria? What are you looking for? Because on a day like today, when everything is green, it is really easy to chase the next shiny thing, right? A good example I'll use is that we're starting to, you're just starting to see incremental flows into the GDX and GDXJ now. And, everybody as a large cap, and us included, maybe not everybody, we have been avoiding Barrick Gold. It's underperformed. It's a reason it's underperformed because there aren't fundamental investors chasing it. But versus say a Newmont or a Nico Eagle who have performed better and executed better. If you look at that and go, there's a natural thing to go, well, Barrick's underperformed, so I should buy it now, right? And I don't think that's that's a deviation from your approach. That's chasing momentum. And so we've kind of got to, from our perspective and what we do, is you always got to remind yourself, what is it you're actually looking for? Just because it's an opportunity to make money doesn't mean it's the right opportunity for you or where you should be putting your money at that time. And so the reality is, this is going to sound odd in talking about money, but we consider ourselves value. We look for value. We're valued almost we're almost, I would describe it as value investors, but that's what we look for. We look for things that are undervalued, but
fundamentally mispriced.
Right.
Like you could pinpoint at the asset that's worth more than the market is valuing that. Could be exploration, more likely than not is development.
Right.
Or expansion in an existing producing site. That's typically what we see the most, which for us is even better because it's lower risk in terms of the development pace. And has to be coupled with a management team that has an ability to deliver.
So yeah, we're looking for things that are undervalued. And one thing that I will tell you, and this is a fact, there are lots of things that are undervalued. You just ask the CEOs of those companies, they will tell you how undervalued they are relative to their peers. And they'll adjust the peer set so that they're always undervalued relative to the peers. And so I think that's just because it's cheap doesn't mean you should buy it. There's often value traps, even in a market like this. It may be cheap and it may go up with different things, but it can be a value trap in the sense that it won't outperform, right? And that's what you want. What we want is we want to put our money into things that are, fundamentally undervalued. There's something that the market is missing, and that's what you get oftentimes in junior mining, because it is a somewhat because it is a small market. You can get this valuation dislocations like that because of that. And then what do we look? But then how do you achieve that value? And as Sam mentioned, key number one is management. Do you have a group of people who can actually deliver, can close that valuation gap? And that doesn't mean that we'll only, that doesn't mean we only bet on, established management teams that have done it before. Because sometimes even established management teams that have done it before don't, maybe they got lucky with a drill hole in their last play, and that's what caused it to work out, right? It's, it's not just the people, but it's also the plan that they have to move the thing ahead.
Yeah, so we look for things that have kind of like a structured 12, 24, 36 month plan ahead of that. It's not the, we're going to go out and do some drilling and then figure it out. We typically buy, like, if you were going to spend millions of dollars on drilling, you should already know what you're going to be after. Obviously, the results are going to inform the view, but you should already be thinking ahead enough to know that you're going to be after. I guess, this summer I've seen a few very interesting things. And I think, there is one that it's a very clear turnaround story. It's an operating company, has had lots of problems. There are good people there. The asset has been challenging. They had a hedge book. Um, they finally, with the band-aid, uh, kind of guided the market lower, raised a ton of money to buy back part of the hedge book, changed the mining contract there. The mining, went to a mining contract there. But we still need to go to this conference to see them face to face and try to figure out if this is where we're going to put a ton of money into this tunnel. It is, a spectacular part of the world. We know the people who run this asset, and if things go well, this is going to be 100 to 100% higher just by the turnaround alone. X whatever happens in the gold price. So that's something that we've spent a little bit of time on. But again, we're looking forward to the conferences to be able to meet them and sort of confirm our thesis and understand better the exact, the defense part. Like, if we buy this, what are the next crucial moments that we need to pay attention to, and what are the key indicators that we're going to be looking for to validate the research.
I think that's turnaround stories are a great valuation opportunity because oftentimes, and especially with producers, it takes a few quarters before the market recognizes that a turnaround has occurred, even in a good gold market like this. And the one thing I'll tell you, in a good gold market like this, that rising tide, makes that turnaround a lot easier, right? If you're in a tight gold market, and those stumbles are a little bit tighter, whereas if you've got with gold ripping, you've got a little bit of wind at your sails. It makes it a little bit easier to get the things done that you need to get done. You have a little more flexibility, and so I think that's an area we're looking. The other one that
And this one has, sorry, before you go there, this is all the signs of capitulation. We were pitched this though for about 6 or 8 years every year, and it's always been a great story. But in my view, the valuation was always a little bit ahead of itself. Now, I mean, after the problems, it feels the other way. Now, nobody's pitching it to anybody. The valuation is below where it deserves to be. There's no momentum, which to me is, it's the synthesis of a good value opportunity. Now, what's the catalyst? In my view, the change of mining contract and the recap of the cap structure, because it removes the overhang of another capital raise. But anyway, sorry. Yeah, we'll see about that.
yeah. No, I think that's you said that no one's pitching it to you, right? I remember at PDAC, there was a name that everybody pitched me, and it was like brokers and different investors and different investment banks. And I was, and it was like, I immediately put it on the avoid list because I was like, there's too many people are excited about it. And it's round tripped since that event. And I think that that's something that that you need to be cautious of. If everybody likes this story, it's a crowded trade already. So you got to really be careful in valuation. The second kind of category that we like, and there's a bunch of different categories or kind of niches, but these are sort of general, is producers with discoveries. So you have a producer that is making money, and anyone who's not making money in the current commodity price environment, unless maybe they're producing zinc, which is never profitable. Anyone who isn't making money in the current environment probably be very cautious of. I guess maybe some of the platinum palladium producers are break even at this moment. What I would say is that sometimes these producers that make a big discovery, they don't get as much credit for it right away, but it could be transformational for what they've done for their company and what they found. And the advantage is that they have the cash flow to fund this thing forward. It's not like you're going to get cut off at the knees because they made a big discovery. Their stocks run up and they're going to do a big raise because they need to go drill more. They might, is junior mining, but generally what happens is they're able to fund advancing that asset out of their cash flow, especially if they've got their primary operation is stable. And so you can definitely get a win, and often oftentimes you get. Sorry to link it back to the other one. I remember there was a turnaround story. This would have been back in the 2010s, but there was a turnaround story that I covered. It was Lakeshore Gold, right? And it was a turnaround story first, and then they made a discovery while they were turning it around, which was the 144 gap zone, and the market didn't care about the discovery initially, right? No one cared, and then once people thought the turnaround was real, all of a sudden then it got another leg up because people were, it's like, oh, they have a discovery too that's going to expand their operations. So I think that's an example.
That's a perfect example.
But I think that but that one took 5 quarters for the turnaround to people to actually go, oh, that turnaround's real. So I think this is that's the other category we're looking for. We like especially small producers with discoveries, because those are big wins. I mean, K92 has been that forever, and they're doing it again. We're continue to be shareholders of K92 with the porphyry work that they're doing, but they continue to for years they were drilling off the main veins there, and you could just tell that there was just always going to be another leg on the for them to move up as they go.
Well, I can think of one in Mexico, one in Brazil, one in the US, maybe, that caught my eye. There's a specific category and discovery. So, it's not like you show up to this conference with a list of 50 companies you want to see. There's, I think we have between 5 and 10 maybe. Ultimately, we probably only will buy 1 or 2 of them, and maybe we'll find something new. So obviously that's part of the exercise of going to the conferences is we also miss things. Mm-hmm. But yeah, on this sort of new discovery within a producer, I think there's a few. That was actually one of the things that surprised me with the summer. Some drill holes that came out of producers where the stock didn't move at all, and in my view, it should have moved. And in some cases, they have put releases more than once, and stocks still it's moving with the commodity price, but it's not moving on the discovery. So that's one that I'm pretty excited about. This company is to explore Pelaez and
another a bit of a derivative of that is our developers that have discoveries, right? And so as an example, a name that we follow that we're waiting on, I think we should be seeing some drill results on is Bravo, right? So Bravo has a what we consider to be a top tier platinum palladium deposit we've been invested in because we've been we're buying it off cycle, but the thing that they've have just got back to drilling is this copper gold IOCG formation that they had some pretty good hits on early on, but the focus was back on finishing the drilling at the platinum palladium deposit. So I think there's certainly one where we're looking for that it's a bit of a derivative. Developers with discoveries isn't as I think as tends not to be as attractive, but it still is something to keep an eye on, right?
Unless the discovery is exceptional, which it could be.
Could be, yeah.
There's also the sort of startup project that is not very visible. It's on the market, it's well funded, it's many times it's a former operating site or some sort of asset that was already advanced, so that you can put it back in production without having to pay full project finance, $1 billion capex. We did about $100 million or less that we raised in a private placement with a few wealthy individuals. Those were also many times mispriced because they're not very public and visible, tightly held. And once they graduate to a producer, it takes a quarter or two for them to start showing up on the cash flow models. or people who track producers, and then they just snap them out. And really, I think I only have one of those in the world of the island. That's also a theme that I, I've been successful with in the past, and I think we're coming into the part of the cycle where you're going to get to see maybe a few more of those.
Sam, that's a great point, right? Like those, and oftentimes what you're getting is an asset that maybe struggled in a different cycle. You see this a lot in silver names, not particularly what we're necessarily looking at. We've had long discussions on silver, but you see this, occasionally you see these gold projects that maybe the fatal flaw wasn't just the metal price. There was something in the resource or something in the metallurgy. And now a new group has got it. They've addressed that fatal flaw, or they have a solution to that fatal flaw, and they're moving it ahead. Um, and I think that those can be super attractive opportunities, especially it kind of and that developer to producer transition. It can be an investable opportunity. There can be you can get a move from a valuation perspective, but you gotta time it perfectly to get that move, right? You almost want to buy them, after startup, right? A lot of these assets, especially the bigger ones, they'll struggle on startup. Actually, the really big ones and the really small ones struggle on startup, and then the in between ones are a little bit easier. And so you just gotta and you go, oh, it's starting up. They just fatal flaw. Maybe it's not producing quite as much as they thought initially. That creates an opportunity, and you can make a lot of money in those situations too.
I think I've covered the names without mentioning that I wanted to talk about.
Yeah.
But I think the ultimate one is the serendipity of going to these conferences and the shows, and you know meeting people, hearing what they're looking at or what they're working on. Frankly, it is shocking. Like, we have all these news wires, and it is shocking how many incredible stories we miss. And every time I go to a conference, I find a few stories that I can't believe have been public and have news flow that I've never seen. They have never chronicled the wires that I follow. It's certainly worthwhile going to these conferences just for that alone, plus all the other things that you get. So let's see what.
Yeah, I think the biggest thing at these conferences
happens.
is serendipity, right? It's that you run into somebody that you haven't seen. You find out what they're working on. They go, "Oh, I'm at this new company," or maybe it's a story. Oftentimes, a story that you've written off in your mind, right? You've said, that isn't ever going to work again, right? And then it comes back, and the fatal flaw, that the reason that you wrote it off is now resolved, whatever that is, as long as it's not the metal price. Is the key, because if it's just the metal price skated the asset on side, it's probably not, it's not a medium term investment, right? It'll work. But if it's something else, like it's a resource model or the metallurgy or something on the site infrastructure or a government change, right? Like those are big. We're definitely seeing a lot more resource nationalism. So I think there's certainly, looking at the time, this draws this episode of the Compass to a close. Next episode will be, I don't think it'll be live from Beaver Creek, but it'll be from Beaver Creek. And so we look forward to speaking to you then, and maybe we'll have some new ideas that we're looking at in detail. Thank you, everybody.